Hi everyone, this is a weekly COT reports review. If you're not familiar with COT charts, I'm going to do a brief introduction first. COT stands for Commitments of Traders. This is a weekly report published by CFTC, a financial regulator that observes the futures market. This report provides insights into positioning of large speculative traders. The report is known for over 45 years. It's one of the best insiders information that is available in the market. However, it has certain disadvantages. First of all, it's a weekly report. And second of all, that it's published on Friday with a breakdown of positions from Tuesday. So there's a 3-day delay in the data. However, COT report still can be very useful because it's a long-term sentiment indicator and it can show the ebbs and flows of the trades. So you can feel the impulse of the market and can understand the positioning of traders. So there are two types of reports provided by CFTC. The legacy report that includes 3 reportable groups: commercial traders, non-commercial traders known as speculators. So this is the group we're interested in and we closely follow. There's a good correlation between non-commercial traders and the price of the underlying instrument. So in addition to this, you will also find the modern report, which is published for financial futures only. It has 4 reportable groups: dealers, known as sell side of the market, so basically brokers; asset managers, represented by investors, whose clients are mainly institutional; then leverage funds traders. And this is the group we're particularly interested in because they are represented by hedge funds, and at the same time, they trade with leverage. So it means that their trading flow is very speculative. So this information helps us to understand the positioning of speculative traders, but also find moments when their positioning is extreme, because this can be an early signal of a potential reversal. So here below, you will find a table. Below each category, you will find a table describing the instruments that we have. Net positions, that's basically the difference between long and short positions, the weekly change, long and short ratio, and finally the COT index. The COT index helps to identify if the current positioning is extreme. This is based on the formula from the book The Commitments of Trader Bible, written by Stephen Breeze. So the formula is very simple. It's very similar to the stochastic indicator. So we basically convert net positions to a scale from 0 to 100%. So here's the formula. You can find it on our website. And also, if you're particularly interested in COT trading, you can read this book. I really recommend. There are many interesting ideas that you can find very helpful. So first of all, when I analyze COT charts, I try to look, first of all, which currencies are the most bullish and the most bearish, and if there's any change. It's not surprising to see gold always on the top, the same as silver, because many investors, they have a certain percentage of their portfolio allocated to gold. So gold will always be the #1 instrument, but the positioning may change. We can see actually that the weekly change is not really significant and didn't change that much. The second thing that I watch closely is that which instruments have the biggest increase. I mainly pay attention to the FX, which are more speculative instruments, because, for example, Bitcoins are mainly used, Bitcoin futures are mainly used for hedging. That's why you see that net positions are negative. So I pay attention mainly to the currencies. Here we see that we have, like, the most bullish instrument is the pound. I would still take this information with a grain of salt, because on November 3rd, we had the meeting of Bank of England, which radically changed the current situation and sentiment towards the British pound. So I think the pound will actually lose its #1 position. So let's check which currencies have the biggest change. First of all, we can see the euro. We see some reduction of net positions, which were short. The second instrument that had the biggest change is New Zealand dollar. So it's getting more bullish. So this is a clear signal that this instrument was bullish before, and it's getting even more bullish. So we can check the charts, what's happening on the New Zealand dollar. This can be a potentially interesting situation. Here, that this change is related to short positions. So we need to look if this is happening, if short positions are reduced. And overall, we can see there are no big changes on all other currency pairs. They are insignificant. Let's also check the leverage report. Here we see we actually have a bigger scale of changes. So changes in the on euro, we can see also reduction of short positions, potentially because we see that the net position is negative. Then the biggest changes are happening on New Zealand dollar. Actually, the scale of changes is very similar. We can see the Japanese yen is probably one of the biggest, second biggest. So far, we can see it lost 8,000 positions more, and it actually became even more negative. So this is interesting. And all other currencies there, that we can see Australian dollar getting more negative. And the rest, I think, is more or less irrelevant. This is also confirming that New Zealand is getting more bullish. And the information for the pound, I would still ignore this due to the situation that happened in the markets on November 3rd. Okay, so let's check the charts. First of all, I have this chart here, where you can see instruments are sorted from the most bullish to less bullish, well, the most bearish. Here we can see that pound has the position number 1. I expect that pound will lose its position, and next week probably the New Zealand dollar will be the most bullish instrument starting from next week. And I think, as we can see, many traders have still positive net positioning for basically non-commercial traders and leverage fund traders. So I think pound still has a lot of room to fall, because what happened in the markets was actually quite huge. The Bank of England disappointed the markets and didn't increase the interest rate. So as the net positioning was positive, I think pound has a lot of room to fall. And New Zealand dollar has potential to become the most bullish instrument. We can see some instruments, they have a different situation, like non-commercial positions are positive, while leverage traders are negative. We now have two instruments which are like this. It's the euro and the Canadian dollar. And well, we can see also the Japanese yen and the Australian dollar are the most negatively positioned instrument. So let's review a few charts. First of all, I wanted to check the situation on the New Zealand dollar, because this instrument is just getting more bullish. So what we can see here, that it's getting higher, and actually the level is almost like we had previously this year. So in my opinion, this is very positive for the New Zealand dollar. And look here, especially when we see long and short positions separately, we can see long positions start to accelerate, short positions are decreasing. So this is very positive in general for the New Zealand dollar. If you're trading swing trading style, if you have a swing trading style, probably you should look for opportunities on the New Zealand dollar. So COT index is not yet extreme. We are getting close to 72, and yeah, there's still room for the New Zealand dollar to grow. Let's also check the situation on the euro dollar. So here we see that basically the leverage traders, and pretty much the same situation that for non-commercial traders, it's the probably third or fourth week that net positioning is reduced. So we're getting close to zero. Actually, euro doesn't really flip that much over zero many times. Usually when the value changes, we have substantial trends. So in general, I would say that if we look the overall trend, it's negative. But I think what we're experiencing right here, some traders who were short, they're probably reducing the positions. And look, if we check the next chart, we can see that both non-commercial traders are reducing short positions, and leverage traders are reducing short positions. At the same time, no one is really increasing long positions. So this is more like a consolidation, in my opinion. There is no particular signal. One thing that I wanted to pay attention to is that on non-commercial positioning, we can see that both long and short positions are very high. In case if one of them will be reduced, I think there's a substantial opportunity that euro dollar can move quite a lot. And it's not clear if which direction it's going to be. Potentially, euro still has a lot of room to fall below 1.15, in my opinion. Given all the fundamentals that we see, I think euro has potential to unwind basically its long positions. So COT index are not they're not really signaling anything, but we can see leverage traders. The direction is actually more getting positive for the euro, but so far we're more like in a neutral zone, in my opinion. So another currency pair I wanted to check is the situation with the Canadian dollar. So let's also check this, because it's also flipping very much around the zero. So here, in my opinion, it looks more neutral. Yeah, because we have this situation when non-commercial positions are positive, leverage positions are negative. Anyway, there's a still correlation between those lines. And here we see that, in my opinion, the situation is still very mixed because we can see both short and long positions. Long positions are reduced, and this is for both non-commercial and leverage traders. So in my opinion, this is more pretty mixed and no clear signals on the Canadian dollar. Let's also check the situation on the Japanese yen, because recently what is happening is that we saw that Japanese yen was the strongest currency over the last week. So there's some correction on the dollar yen and most of yen crosses. And let's see, well, first of all, we see that the Japanese yen has actually huge short positioning in general. So we can see that long positions were reduced over the last week, and also short positions were reduced. So here, so yeah, the COT index is not really that extreme, but in my opinion, we're getting very close to extreme values in the future, especially if the Japanese yen will push above 114.60. It can actually get close to extreme values. But so far, I think generally the Japanese yen has still room to fall even further. So there's no indication for this currency to be extremely oversold. Right now, we see the phase when the Japanese yen was strong enough, but I still think that this is going to be temporary. Probably it will last for a week or maybe more, but still further, I think the Japanese yen has still more room to depreciate. So basically that's it. I hope this analysis can be useful for your trading and basically help you to understand the sentiments of the market. So basically that's it for this analysis. I hope it was interesting. Please leave your questions and comments below the video, and I wish you a very nice weekend.